Hello.
Hi everybody, you are tuned into Non-Wealth. My name is Nell.
And my name is Lebu. Today we're actually speaking about the cost implications that you might actually incur when you're buying a property. This is one of the questions that we always ask that, okay, now that I'm actually about to buy this property, how much should I actually have on me right now in order to make sure that I'm not actually underestimating how much I need to actually put on for this particular property?
So the case study that we're going to use is the property that we currently have so that we can just put practical numbers towards this and just give you insights roundabout how much are we looking at.
The nice part about this is that we will actually start, from the viewings, in terms of how many viewings did we actually do, how many phone numbers did we get until we got the tenant. So we're going to actually list all of the expenses that we incurred until we reached to tenant phase.
There's a lot of people that are speaking about property investing without any money down. Trust me, the concept of that sounds so nice until you buy your property. Then you'll understand that there is no such. It doesn't exist. Actually, you need a whole lot of money or a whole lot of credit when it comes to property investing. So let's have a look at it from when we started. I remember when we started, we did a challenge whereby we were like, we are looking for a specific property. So in this case, it was distressed property. So if you go to Property 24 or private property, you'll notice that most properties that are there, 99% of them are not for investors because these are your beautiful apartments or your beautiful houses. So the houses that we were looking for this time around, it was distressed. So we knew for sure that we have to dig. We had to do about 50 calls a day. And you can imagine how much airtime was that because we did this. I remember we did this for a whole week. 30 rand airtime a day, 30 times 7. So on airtime alone, we're already sitting at 210.
I remember with the other agents, they were like, you know what, guys, I really like what you're actually doing. So now let's sit down and have a chat in terms of how can I actually help you. And I remember when you're actually sitting down and having a chat, you don't want to be that guy that doesn't actually front the bill. So most of the time, when the agent didn't really insist, what we would do is that we'd actually sit down, have a cup of tea or water. Remember, that also has its own cost implications. So looking at how much we actually spent on coffees, I mean, we can actually play around 150 bucks. So now looking at that was the amount that we had actually set aside in terms of how do we actually get these people to trust us to a point whereby these people can actually front the bill when it comes to the buying of the property.
And then it went to us securing the property. So we actually went on site for viewing. So looking at how many viewings we did, I remember for this one in particular, we did about 10.
Yeah.
10 viewings. 10 viewings. And if you're saying that you're putting about 150 gas in, that's 1.5 thousand plus the 310 that we had before. We got the property that we really loved, and then came the real costs. Now looking at our real costs is that we got the first call from the first attorney, which was the transfer attorney. We were quite excited about that when they told us that it's a whopping 25,000 that we need to spend. When we ran numbers, we were anticipating that we will be paying the 50k. However, when the attorney was like 25,000, we were like, wow, that's a discount. And then the second attorney called and they were like 20,000.
I remember the day when the other attorney actually called and they were like, guys, you've paid the first attorney. Now it's time for you guys to actually pay the second attorney. We're like, but I paid for the first attorney. And that's when they actually explained to us that, guys, you know what? At this point, when you do buy a property, you need to be actually working with two attorneys. The first one is the transfer attorneys. The next one is the bond registration. So the transfer attorneys is actually responsible for transferring the property from the previous owner to the new owner. So now if you are actually buying the property cash, then they need to actually transfer the property into your name. However, if you're going via bond, that means that they need to transfer it into the bank's name. However, it will be managed by you. And on the other hand, the bond registration. So with the bond registration attorneys, they are actually appointed by the banks. So the bank will appoint a bond registration attorney who will actually facilitate the registration on the bond on the bank's behalf. So if you are actually going to be taking a bond, remember you won't be going to a branch, say for instance for ABC branch. You won't be going to ABC branch every day and saying that, yes guys, I'm about to buy this property. You will have an appointed attorney that will actually be in communication with you to actually keep record in terms of, is everything still on point.
So if I add the first attorney's cost, which was 25,000 to the 1,810, I've got now 26,810. Then if I add the second attorney, which is 20,000, 20,000 plus 26,810, now I'm sitting at 46,810. And then we've got the deposit.
Sure. So now with the deposit, this is where it will actually vary from one person to another. This will depend totally on your credit status and how much is your actually affordability, right? So now with some people they will actually get 100%, and with some they'll get worst case 10%. So working on a 10% worst case scenario of a house worth 800,000, that basically means that I would be paying towards my down payment 80,000. So now what I'm simply going to do is that I'm going to say 80,000 plus the 46,810 of my transferring attorneys and my bond registration and the transport that I was actually using. So now we're sitting at 126,810.
Furthermore, now you're looking at your municipal. Now you need to go to your municipal, actually make agreements with them in terms of registering your rates and taxes under yourself. That was actually about 2,500. So we're going to add 126,810 to 2,500. 129,310. You need to be thinking about the cost implications that are associated with your monthly operating costs. So at this point, you haven't found a tenant as yet. So you'll be paying the bond. The bond will be coming directly from you, because at this point in time, there is no income from your tenant. So if the house was about 8,000, let us just say in this case we're looking at a bond of about 6,500. So we can say in that month, let's just say it will take us a month to get a tenant. So we can say 6,500 plus my rate and taxes, which is about 1.5, plus my, so 6,500 plus my rates and taxes, which is about 8,000, plus my insurance, which is at about 400. So I'm sitting at 8,400 of operational costs. So I'm going to add my 8,400 with my 129,310 for first month. So that will give me a grand total of 137,710.
So now this brings about the question that, do you actually want to inherit the tenant or do you not want to actually inherit the tenant? So now when you don't inherit the tenant, you already know that by the time the property is actually registered into your name, the tenant needs to pay you directly and not the previous owner. However, if you don't have a tenant in that property, now you need to front the bill of the first month. And now remember, since you are actually fronting the bill for the first month and you're actually going to be putting in a tenant, that basically means that you're going to actually lose out on income for the following month. Reason being is that most of the time when you actually go to your estate agents and you're asking them to actually put in someone into your property, what they would then do is that they would actually take the first month's rent of the person that's actually moving in. So now the amount that you would be getting is only the deposit without the first month's rental income. So now if you're not getting the first month rental income, so that basically means that you have actually lost out on 2 months of rental income.
So we can add the second 8,400 towards your grand total. And let's also have a look at it in this way. The deposit, just to put clarity, the deposit that you got from your tenants is not money coming to you. So there will be the money that you as the landlord supposed to put in an interest bearing account, and the tenant has the right to actually ask for receipts about how far is that investment as time progresses. So that's from a rental perspective. So from a rental perspective, if we are looking at worst case scenario, you getting a tenant second month, in this case you are looking at spending about 146,110.
So now when you're looking at the bond, right, this is something that I'd actually like to touch base on. So now say for instance, you had actually told the bank that you want them to actually take money on the first of every month. Then your property actually gets registered on the 5th of the month. This basically means that you would actually be paying your bond from the next first of the month. I'm not sure if I'm making sense. Do you understand?
Yeah,
Sure.
yeah, yeah.
If no one understands that, you then definitely you must also understand. So now this is sort of a gamble, right? So now the date that you actually put in on your bond basically means that the bank will actually be taking on that date. So now if you did put in the 25th, the property get registered on the 15th of the month. This basically means that the bank will actually be taking money on the 25th of the month.
But now you can't be smart about this one because it's by sheer luck.
Yes.
You don't have control over when the bond will be registered. You do have control over when the debit must go through, but you don't have control over registration. Let's look at flip. Looking at flip, now this will vary from how bad the situation is, but I just want to give input, especially about what we are going through in the project that we're currently doing right now. One might take it for granted that I'm just going to fix a couple of things. I'm just going to put tiling. I'll just put a kitchen unit. A kitchen unit is expensive. 50,000 just on a kitchen unit. Tiling the whole house. Tiling the whole house is another expense. Like, I truly think that a lot of these expenses are one of those expenses whereby we're not really into it until you are in it, until you need to actually put tiles throughout that whole house. Then you understand how expensive is tiling. So these are costs that you want to know for sure before you even go into the property, so that you factor them when it comes to calculating your return on investment.
I remember before I actually went into the property investing game, right? And now there were people that were actually building around the neighborhood, but they wouldn't actually finish the property. And I would ask myself that why doesn't this person finish the property? Because I'm sure it doesn't really cost that much. Until I was in their shoes and I actually needed to renovate the property. And these costs are just coming over and over again. I mean, like the people that are actually working, after 3 days, they're like, yes, I'll charge you 7,000 for that. And you're like, 7,000 just for labor? Not actually considering how much you actually spent on the material. So now this is something that you need to understand, that get your quotation before you actually start with the project. Then you'd actually understand. In fact, get the quotation before you actually buy that particular property. Because if you buy the property, now it's in your hands, and now you're getting the quotation, and now with the quotation, you don't really agree to how much you actually need to spend. That leaves you with the huge problem.
You know, I learned something very fast and very important in property investing, that you need to rely on experts. And it's unfortunate, but that's how life is. You will pay, you will front a bill when it comes to relying on experts. I would rather put myself in a situation whereby I trust a project manager who will do the right job, so they won't overcharge me. However, at the same time, they won't undercharge me and not do what's correct. So I'm trying to get somebody who's neutral, somebody who'll come with their expertise and advise me the right way. Because at the end of the day, you can get a quick advice to something that, whereby maybe let's just say there was a problem in the house, and then somebody will be like, no, don't worry, we can actually patch it this way, and you'll actually be spending so much amount. So it's something that it sounds nice that you're saving, but the real question is, are you really saving? So that's what you need to look at when it comes to flip. So with flip, what we can do for the point of this exercise, let us just say that we got that project manager that we're speaking about right now, somebody who's trusted, somebody who has been doing this, and they gave us a quotation that is about 50,000. So now, how are you going to verify this 50,000? Your project manager needs to go to builders, they need to go to cash build or whatever store, and actually come up with a budget, and actually come up with a realistic budget that is aligned with measurements in your house, and that's aligned with real prices of those items that were needed. For instance, if we are looking at a bedroom that needs to be tiled and painted, he needs to go to the shop, give them the measurement of the floor, the area of the floor, and tell them that these are the tiles that we want. How much is that going to be? The grout that will be needed. Can you see, guys? It shows that we are on the ground, man. The grout that will be needed for those specific tiles. And then now, when they're coming back, then you know that it's a proper quotation. With the exercise that we're doing now, we said that we'll just use 50,000 for the rental. So what we will do is that we added 8,400 twice. So let's just say we held it on for 4 months. So one was fixing, then the other 3 was for selling. So those are our operational costs. Now we are sitting at a total of 162,910. Then now we need to actually factor in that quotation that we got. And what you can do, you can add 5% or even 10%, depending on how safe you want to play it, so that you have an additional amount just in case something does go bad. So if we add 50,000 to our previous amount renovation cost, now we are sitting at 212,910. So at this point, everything is fixed. Now we are ready to sell.
When selling, something that you need to really consider is that which estate agent will you actually be using? Because now when you're looking at an estate agent, most of them actually charge 8%. So now if the estate agent is going to be charging you 8%, will you still be able to actually make that profit? So now all of this is actually done before you actually buy the property. Please don't make that mistake of actually buying the property and then only doing the numbers. Make sure that you're actually calculating these numbers before you actually buying the property. So now when you have an estate agent that's going to be charging you 8% of how much you're going to sell the property for, it's important for you to have an honest conversation with the estate agent. If the property is actually worth 1.2 million, and now you know that you would actually be making the profit that you desire if you were to sell it at 900,000, for example, it's important for you to actually tell the estate agent that the property is worth 1 million. However, if they can sell it at 1 million, then they can have the 8%. However, the lower it actually goes, the less percentage they get. So now you can actually do a payment structure of 8% at market value. However, if I'm actually going to be selling it at 900,000, then it would be a 7%, so that you can actually get the money that you're actually gunning down for. So now once you have actually sold the property, or once the estate agent has actually sold the property, you are going to be required to pay 72,000 from the estate agent. So now here's the trick about payment of the estate agent. The payment of the estate agent doesn't come out directly from your pocket. So how the payment would actually go about is that once the money is actually reflecting on the attorney's side, then what would happen is that the attorney will then divide the money, taking it back to the relevant people. So now it will first pay off the bank. It will then go to the municipal and ask the municipal how much does the property own. Then that will actually be paid. Once that is actually done, the conveyancer will then look at the agreed terms that you actually had with your estate agent. Then they'll pay the estate agent. Then only do you get your profit, or how much you actually gave to that property. So if you didn't actually make a profit, you're basically going to see that, okay, I had actually invested 100,000, but now I'm getting 90,000. Then you know you made a loss. However, it's really bad when you have actually invested 100,000 and nothing actually comes back, or you need to still take out money from your pocket and give to the estate agent.
As summarizing the flip, if we add the 72,000, we are sitting at 284,910. I mean, it's clear now, it's solid, that we need to work. We need to have saved a lot of money. That's option 1. Or option 2 is that we need to have had this amount of credit. Now, the thing about credit that you need to take into consideration, it's great that when we talk about credit and you investing your credit in your business. However, now you need to be aware of something. Let's just say that we took credit of 300,000, and then our agreement with the bank was we'll pay them 10,000 every month. So if I'm paying the bank 10,000 every month, the real question will be, where will I be getting that 10 100,000 every month. It's clear that with property investing, number one, you need to know your story. Number two, you need to have a network of people that know their story. Number three, you need cash or credit.
If you don't have either of those, then you make sure that you need to actually get someone that can actually plug you with everyone. Someone like Long Wealth, someone that actually does this on a daily basis and will actually be able to recommend someone that can actually help you. So now if you do actually need a contractor or you need an attorney that can actually help you with property, make sure that you do contact us. Our details are on the description. Long Wealth
Signing out.
Cheers.